Okay, traders, good morning and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, February 16th. Mike Boutros with you on the horn. Great to see you guys this morning. Marcin, Jay, Ted, Agnes, Pete, great to see you guys in the room. So interesting start to the week. We are coming off the back of an extended holiday break. And we're seeing the beginning of what could be a little bit of a nice move here in the dollar to start things off. So on the menu, you're going to move rather quickly here. We got DXY, Euro, dollar CAD, Sterling, Gold, Aussie, Kiwi, dollar Swiss, which I don't like, but it looks like it's making a little bit of a move there. Dollar Yen. And I just want to touch on crude. I'm not actively trading it, but we highlighted a resistance zone a couple of weeks ago. We're there. So I just want to take a look at that. Any other questions or trade setups? Ted wants to look at Aussie CAD. I got you. For Ted. And I'm sure Marcin will come up with a couple of things later too. So we'll look at those as we get through, but let's jump right in. So here's what the dollar looked like a week ago. Okay, this was on the 9th. Here's the weekly chart. We had just come off slope resistance. We were pulling back, and I told you guys the line in the sand is the objective yearly open, 89.93, right? If we buckle and close a daily close below that, or specifically on this chart as it pertains, weekly close, we're pretty much looking for the resumptive move then. Not our favorite scenario, but that was our focus a week ago. The daily chart looked like this. We had just broken uptrend or up channel support. We were testing the monthly open, and again, the risk for that drop into 90.12, which would be the 618 of the advance. That's kind of what the whole focus was into last week's session. Well, we never made the test into 90.13, 90.12 until today. Okay, we just dropped into it. You can see we buckled below the monthly open. That's what these dotted lines are. Stayed there, stayed there. Here's the pull, and here's the first touch. Okay, 618 of the yearly range. This is January, February. Here's your yearly open. So it's a significant Fibonacci level. It's a significant pivot we should be paying attention to, and we're there now. Here's what the intraday chart looked like. There's that pitchfork that we were in. We were turning just ahead of the upper parallel, just ahead of 100% extension. We noted that. There was a February open. Here's 90.12. Here's what it looks like right now. Okay, so not only did we strike at the right, a little bit later than I would expect. It would have been nice if we did it yesterday, but the holiday, right? Here's the strike. We've now covered the entire Monday, Tuesday range. Obviously, we're just opening up the session. Monthly open resistance, former support, now 90.53. If we get above and close above 90.53 today, I'll like that. I'll like that for a near-term bottoming process. Already in this, want to see a little bit more of a strike higher here. If we get through with conviction 90.53, the monthly open, specifically if this range holds for a couple more hours and it turns out to be a range breakout, you'd tack on a quick retracement. Here's what it would look like. First thing I would do, and we don't have conviction on this low yet, which is why we can't really operate off this, is tack on a quick retracement. See, we were 38.2 and the 618 comes in. Perfect. Perfect. Okay. So the 38.2 comes in at 90.68. So that would just be a 38.2 of the range high from the month. That's your monthly fib. Just above that, the big kahuna, as it were, would be right at the 91 handle, because you're looking at the 2017 high, low, and you're looking at the 618 of the range from the monthly highs. Okay, it's all determined on what happens here today. I want to close above this, push through this to get this thing at least a chance to breach above 90.68. That would be the reversal confirmation. Okay, anything lower from where we are now, I just want to remind you where we are. Here's the pitchfork that we're following on the intraday. Let me just copy it here. Okay, scratch this, scratch this. Anything beyond 89.90 specifically you're really flirting again with disaster. You're talking about 89.50, the low day close for the year and beyond. It really is something needs to happen here, okay? And we're looking for it early in the week. Any questions on the dollar? As far as the economic docket's concerned, you do get a flurry of data tomorrow. It comes from across the board. As it pertains to the US crosses, you get sterling core inflation, you get Canada core inflation. For the US, you get retail sales and the FOMC minutes, which the minutes or whatever. But retail sales are expected to show a little bit of an uptick from last month's previous contraction of 0.7. We're looking for a clip about 1.1. So the potential, okay, to get that shake in things is there as we get a little bit deeper into the week. Questions on the dollar. So where does this put us on the majors? Well, here, the 9th. Here's what euro looked like on the breakout. This was last week, again, also on the 9th. Our focus here was the fact that euro had broken multi-month downtrend resistance, shifted the focus higher. Okay, kept us on an outlook into like 21.28. Just above that, you're looking at the 50% retracement. The big resistance was just shy of 22. We didn't quite make it there, but you're seeing what the beginning of what could be the onset of exhaustion here in euro as well. Start off on the weekly chart. All right. So ideally, okay, sort of fairy tale land, here's your 25% parallel. Really nice resistance, breaks, acceleration. Downside was kind of messy. Here's the upside. Bearish inval was 22. Like I said, just shy of 22, 129.97. So we're looking from that bounce a couple weeks ago into the start of the month. We're looking for exhaustion ahead of this zone, ideally. It's also the high week close for the year is 22.18. Beautiful spot. Beautiful spot. I'd be way more aggressive on this one, to be quite frank with you guys, if we had gotten the strike into that zone. I don't want to get too nitpicking and cherry picking. Perfection is the enemy of progress in this kind of game. So we don't want to get too, nitpicky here, but the game is exhaustion on the upside. Here's what the daily chart looks like. It's the same gig here. I would have loved to see this fail at 21.97, 22. We still could get it. Okay, we still could get it. It's early in the week. But that's the risk, right? You have those former swing highs from last January's bounce. You got that slope on the upside, really nice pivot. And you got the 618 of the yearly range. Very, very much like the 618 in the DXY range for the year. That one hit the 618. Euro didn't. So a little bit hesitant to get aggressive on it, but the initial touch looks good. Here's what it looks like on the intraday chart. I don't have any form or structure for the decline yet. This is the same chart that we were looking at again on the 9th. We broke through that 100%, so I've removed that. Here's your February open. Here's the 50, okay? Here's the 618. So do we get one last strike higher and failure into this region? 2020 close is 22.15. Remember, the high week close is 22.18. The 618 is 22. I mean, it's all loaded there. So it's 100 pips away, right? It's 100 pips away. So we'll see what happens here. We're now testing the range lows for the week. And like I said, if it turns out to be a reversal pattern, your initial touches are 20.53 on the downside, and the big zone is still 20 again. That was a big pivot. Again, if we do get the break, you tack on the quick retracement off the low, get some reference. 38.2 comes in at 120.94, so just below 121. And the 618 comes in just below that 2050 level. 2040 is the 618. So any way you slice it, I'm liking the levels. They look pretty good. Don't want to, I don't want to get too antsy about whether we got the clip of 22 or not. If we get the follow through and a move sub 2090 here, you want to continue to like the downside here in the euro near term. Questions on euro? We're pretty flat on euro data for the week, so keep your eye on the dollar move here. Okay. Man, I like the acceleration here. This is looking good. Getting excited. Okay, dollar CAD. Here's dollar CAD coming into support in 126. We saw a reaction in overnight trade. Here's what dollar CAD looked like last week. Okay, the focus here, the weekly chart for dollar CAD still a mess. There's nothing to write home about here. We're into major key support. We talked about this last time we struck it back last month. We're there again. It's the 786 of the 2017 advance. It's the 2018 objective yearly open. It's slope support. We're there. We're there. So again, another thing in favor, giving the dollar some hope here from the weekly standpoint. Euro on the daily looks like this. So here's the pitchfork that we were following last week, okay? And here's the pitchfork. We were following this in the intraday chart too. We were hoping to see support there. I told you guys if it didn't break, we're right back into the key support, which is also the yearly opening range low, also the January low, also the 2018 open. I could keep going, right? Slope support on the daily chart. It's all loaded there. So here we are. So get rid of this, done, null, and void. Even if it moves up, you're still looking for resistance at 27. Don't need that slope to verify that. I'll be looking for a new gradient, but at the end of the day, the levels remain objectively clear from the lateral standpoint. 26.88, 27, still resistance. Monthly open, need to crack a larger run here in dollar CAD. It's the daily chart. Intraday looks like this. So this is a new slope. Here's the intraday as it stood last week. Again, we broke here, we dove right into this zone. Here's the touch and reversal. So I'm looking right back into 28.88, 27, same zone here for a breakout. That's now the weekly open is just below that. The weekly opening range highs is in that region. And again, in the next couple of days here, as you kick it out, you'll get into that upper slope. But that's what I'm thinking for dollar CAD. You're still coming into a big, big support zone. I love the initial reaction here. We want to see some follow through and a break, some sort of break of downtrend resistance before we start to try to fight this one. Canada core inflation, like I said, comes on tap tomorrow. We're expecting a print of like 1.4, I think. Last month's was 1.5, so I'm not necessarily expecting much of a shift per se for the dollar, for the Canadian dollar tomorrow. But that's going to be released at the same time as U.S. retail sales at 8:30. So just keep that in mind. Okay. Questions on dollar CAD? Flying through this. Watch that support at 126 bounce to see if we can get some follow through here to support the dollar. Now, what's been the strongest performer against the dollar? Actually, interestingly enough, as I was talking to you last week, Swissy was, but let's put Swissy aside. We'll hit that later. Everyone's all about the sterling breakout. And the sterling breakout has been a phenomenal move. It's been like clockwork with regards to the fact that, you know, we warned that if we did break, here's again what it looked like on the 9th, if we did break this major resistance on the weekly chart, that there would be acceleration, right? That's kind of our base case scenario. We talk about it all the time, a breach of uptrend resistance, especially one that's been tested for over 8 weeks, would, you know, you'd think would yield a more accelerated rally, and boy, did we get it. Took a couple of days to get it started, but all things held constant, it's ripped through. Now, this again was from the 9th. Let me take you back to last week's update. Here's what it looked like on the intraday chart, but as it stands, this is the 618 extension from the advance off last year's low. It's 139.55. We just hit that this morning. What was the high this morning? 39.52. Okay, I knew it was off by 3 pips. We just missed it this morning. Just above that is 2018 high week outside reversal close. Try saying that 4 times fast. Big move, right? Huge level. Here's the initial touch. Now it just so happens that a sterling on its massive, I don't know, what is this, like a 21% rally runs into the first major breakout resistance as dollars coming into support, as euros shying towards resistance, as dollar CAD is at support. right? The picture pieces, the puzzle seem to be sort of aligning. So here's sterling. I'm not saying I'm trying to short this yet, but I'm just trying to say on whole, this is kind of one we'll be looking for direction or kind of confirmation for the dollar move. If the dollar is going to make at least some sort of relief recovery here, you'd think sterling would see some sort of pullback. Here's sterling on the daily chart. Momentum knocking on the door on 70. We haven't seen a momentum 70 breach since August of last year. I guess that was July of last year. Uptrend resistance. This is just this slope, a parallel, another parallel. Resistance, resistance, resistance. What is that? Too early to tell. It's the daily chart. Might be something, right? Here's the intraday. And again, all of these slopes are based off of the same gradient, guys. So it's a pitchfork, but it's the same gradient we're looking at with the daily chart. And so here's sterling with the breach above 38.66 labeled resistance last week, right into the open, into the upper parallel, a little ahead of schedule, right? Might have been off on the circles there, but nonetheless, 39.50, right? Came right into it. I quoted you guys 39.30s on the 9th, but here we are kicking out 39.50s. And here's the pullback. So again, something to note. I'm definitely not playing with fire on this one. You know, the top side breach from here, 39.99 is going to be just higher, that 88.6, right? The 100 on the weekly chart. There's still, you know, again, it's like the euro, right? You could make that last stab just into the higher highs there, but all things held constant, you're checking uptrend resistance. Don't get suckered into sterling. If you're holding long, it's a good time to take a little bit off the table, bring your stops up. If you're looking for new opportunities, you know, a break back below the weekly open, which is 38.50s, just below last week's swing high, would be the onset of maybe a larger correction in sterling. But any way you slice it, you want to be mindful of the fact that we've made a pretty major breakout here a couple weeks ago. So cautionary tale, but nonetheless something we could use for further evidence on trying to press anything on the long side of the dollar. Questions? All right, moving along. Gold. Here's what gold looked like last week. So, beautiful turn. We talked about the weekly charts for this. We talked about the daily charts for this. Again, the weekly charts since the beginning of the year, the only thing the weekly charts have really given you was the weekly open, or the yearly open rather. Right into the open of January, you make a massive outside day reversal off of resistance on the intraday basis, goes into the 618 on a weekly close basis, perfect rejection, right? And here's the drive lower. So this drive now coming back into support, right? Or at least trying to break below support, weekly support, 1806, 786 of the rally off of that September low or that November low. Never got a weekly close below. We still haven't, right? We dropped down as low as 1780s a couple of weeks ago, but we haven't closed the week below this. We're looking for something around this region to give us some guidance on the weekly close this week. On the daily chart, getting clear. Big support zone right here into 1790. This is the same charts we've been following. Again, here's what it'll look like. Again, back on the 11th. We had just rejected at the 38.2. This was the monthly open. Beautiful pullback. We noted, look for a reaction here. We're here now. We're here now. The zone is 1790 into 1803. It's a 13 pip zone, $13 zone. But you've got a lot of slope there. Remember, we're looking for the conviction break again of the uptrend from last year's low. This is the low from November 2019 and last year. And there's a lot to do here. The monthly opening range is essentially set. We're looking for a reaction here today. Here's what it looks like on the intraday. Okay, broke 1820. Look for 1811, last week's open. That broke. Here's the break today. Drives right into this zone. watch out. Watch out. If it's gonna rip, I just wanted to leave this here, guys, just for objective reasons, so you guys can kind of walk through the way the trade panned out. But let's clean this up. This is no longer the weekly open. So I'm gonna go ahead and scratch that. Here's your new weekly open, by the way. Still leave that 618 as a reference right now. Last week's low. Here's your key support. Watch for reaction here. The focus is if you get the close below. If you get the close below today, keeps this focus on 1760s, 1740s is really the 100 off the high. That's kind of the big one, but it's all determined on what we do here. This could end up also being some sort of consolidation pattern. I already see it online. People hear a higher low, or it's getting lower highs, and they're already looking for this to be a higher low. Could be. I don't play that game, right? Play the market as it play at the levels as they come. Right now, this is key support. Look for reaction into this zone today. So good question. Near term bearish inval, I'd probably leave it the weekly open. If we get back above that, I just don't want to touch it. But the real level, the more objective level, I should say, is still going to be 1850s. That's the monthly open. That's the 50%. That's the 38.2 of the drop, rather. That's slope resistance, right? So hard bearish inval, near term bearish inval. Make sense? Okay, so that is number 6 or number 5, gold. Here's Aussie. What a coincidence. Aussie is also at a big resistance zone that we've been talking about for some time. Here's what Aussie looked like last week. Again, back on the 10th, we were coming into this where we were bouncing off of this move here again. The weekly chart, you know, had me kind of ticked off because I was looking for a larger turn. Didn't materialize. We broke right back higher. What was the key resistance level we've been talking about since last year? 2018 open, 88.6, 78.01 into 78.36. Big zone. Big zone. Here we are. Daily chart looks like this. You're already poised. It's not there yet, but the threat is there for sure to mark an outside daily reversal off a fresh monthly high resistance. That doesn't get more juicier from a technician standpoint. So looking for reaction here today. Again, another dollar cross at major inflection resistance. This is big. You know, your yearly high day close, mind you guys, is right here as well. It's right at, what is it, 77.99? It's right at 78. Here's your high day close for the year. This spot is loaded with stuff. So looking for reaction again today into the start of the week. That's the daily chart. Here's the intraday. And mind you guys, all of this rally that we've been seeing since that outside reversal off the low, momentum still unable to clear 60. To tell, right? If this is a real turn. Here's the intraday chart and why this looks even more appealing. You're now kind of struggling at uptrend resistance. So again, the daily chart, we broke that little downtrend from the beginning of the year. We're right back into here. Intraday chart, we just came off, broke through that. Here we are. Here we are. So uptrend fizzle, right? You're seeing divergence all through those last couple of peaks we've been making. Higher high, higher high, higher high, higher high. No confirmed higher highs in the oscillator. Could be an exhaustion trade. Again, I discount the beginning of the week because I hate these holiday weekends. Kind of jacks up our opening range for the weeks, right? So I don't want to get too, again, nitpicky, but initial turn looks good. If you make it below the median line, the real level we need to break is kind of 77.20s. Friday's low, slope. That's kind of the pivot I would want to see to validate the larger drop. But boy, nice trade so far already. Ultimately, even if this pushes higher, right? So if Euro goes for the last stretch into resistance and Aussie wants to make some sort of radical move, 78.36 is still going to be the level you need to clear. So I'd still be looking for an exhaustion somewhere in this zone, even if it reverses. Okay, just every case scenario there for you on Aussie. Kiwi, similar scenario. It's basically testing the 786. So here's what the daily chart looks like there. More the consolidation, right? We talked about Kiwi last week, and I was even asking you guys, the breakout, is this a consolidation breakout? Doesn't look too convincing yet, and it still didn't. It never did look convincing because your breakout of resistance, technical analysis 101, you're looking for that resistance to offer support. Okay, that held. Next day, didn't really get much pop. Tested it again. Okay, that drove deeper, but I guess you could say that held. And here's the exhaustion at the top side again. So for sure, I don't want to say for sure in anything trading, but for me, by my part, that's not going to be a breakout play that I'm going to continue to favor the upside bias. The 786 held. Here's the pullback. Again, the weekly trade or the weekly chart has us in a similar stance here. That's where we were last week. We went for another drive that failed. Here's the 786. So on this one, I'd want to see a break below the monthly open. Those lows, the monthly opening range lows, 71.35, and this is my problem with Kiwi, and I've told you guys this from the start. The levels are just so stacked up, right? So objectively, I would say this is my zone of support, 71.35 and 70.50, right? Just because that's the monthly opening range low, that's the monthly open, that's slope support. But if we take a zoom back, this pivot zone here into 71, I don't want to ignore that. That's been a radical pivot zone. So 71 has to be the breakdown level. I kind of think if we're not already in this one, you might be chasing it, but that's the idea. A little bit lower conviction in my opinion, but very similar to what we're looking at in Aussie. Right, very similar to what we're looking at in Aussie. Bigger lateral resistance on the daily chart. I think Aussie's kind of near the yearly highs, nearly range highs. That's kind of a little bit more convincing from a technical standpoint, but essentially looking for the same setup. So don't jump into both of those at the same time. Okay, Swissy. Well, I already all covered Aussie and Kiwi and CAD. So I guess Ted, I'm just going to jump into your question real quick since we're here. You want to look at Aussie CAD. Let me see what that looks like. Right. So you can see we're stalling here at the 786 of the yearly decline. I'll liken this more, Ted, to the Kiwi trade, which is kind of my issue. Would have liked the higher strike before failure, but you are at a decent pivot here. Momentum is not quite as telling. Yeah, I mean, ideally you look for resistance or you look for an exhaustion ahead of 90, 99 for the move lower, but I don't think near term the structure is there yet. So that's very similar to the Kiwi breakout, right? Breakout, but not much fizzle. So let's just scratch that. Clean this up a bit. That's your key support near term. There's some swing lows down there too. That's your key support near term. I would say right into the 98 handle. Decent pivot in general is because of the big figure, but you're also looking at upslope support. And it's too early for this, but I just want to show you what I would consider if you saw a continued move lower. I bet you the 100 would come in pretty just above that 98. So like 98.16. That's your butter zone, Ted. Again, real near-term stuff. But that's a break below 98.05 is what you would need for a larger setback there. Does that help? Some color on that? Thanks for the help. Or he says, thanks, Mike. That helps. All right, cool, Ted. Anytime, my man. So that is Aussie CAD. Okay, into Swissy. As I said earlier, I'm not a big fan of this thing. You know, when it gets clear, I love pointing you guys out to it, but it's for me just chooses direction and rips, doesn't give you any opportunity for ins or out, nowhere to place a stop. And then same thing on the turn. It's kind of vicious. It's already poised again on this one also to make an outside daily reversal. Here's Swissy on the weekly charts. It's a mess. Like, yeah, there's nothing really to say here. 90 is going to be your resistance, 89.98. On a weekly standpoint, the yearly open, 2021 open, comes in at 88.25. That's key support. Nothing really on the weekly chart to write about. Here's the daily, and here's how Swissy looked last week. So we were talking about this break of, you know, the channel that we were following off the yearly lows. Looked pretty clean. You got a lot of touches of support. That break, right? That kind of fizzled out into the monthly open. Today, struck lower, turned just ahead of the 618, which is right here at 88.67, and just ripped back higher. Is this the onset of the reversal? Well, again, DXY at resistance, at support, Euro at resistance, Aussie at resistance, Sterling at resistance. I mean, dollar Swiss at support. So I want some structure to the advance. Here's what it looked like on the intraday chart. So that pitchfork was so well suited. It was like ping pong, right? And that break should have yielded a larger sort of setback. It got to the 618, or just ahead of, I think, again, just pips below. I can tell you right now, registered 88.71. Yep, 88.71. So 3 pips, 4 pips off. And then we bounced. So is this the onset of a bigger turn here? Very possibly. Okay, very possibly. We struck lower, turned again, just pips from that 618. Here is the reversal, taking out the entire Monday range. If you want to count yesterday, markets were closed anyway. 38.2 is now resistance. That's 89.35. That hasn't changed. Okay, if we top last week's Friday highs there on a closed basis, we'd be more accepting the reversal trade. At that point, we'll want to take on some new slope. Don't have anything yet, but that's what I'm looking at for Swissy. Yet another cautionary tale for the dollar sell-off everyone seems to be so excited about, coming into some major support. Last but not least, dollar yen looks like this. And here was our last update on dollar yen. Okay, so that drop into the 38.2, I think it was 104.55, ended up just holding. Remember, for our part, we were looking for a breach above 105.30 for bearish inval. Initial resistance sorry about the typo there. Initial resistance 105.13. Here was the intraday chart. So we were looking for a low in this zone, either 104.39 or 104.18 was the low, right? That was the bullish inval. We wanted to find a low somewhere in that zone. It worked out perfectly. Right, a couple of days later, you struck, came within pips of 104.39, and that was the low. Here's the rally back above 105.13, shift the focus higher, and here we are again. So look, it's at the monthly range highs. For dollar yen's part, I would have loved a 106 tap. You guys know that. Here it is on the daily chart. Pretty beautiful region. Still could get it. But with all the dollar hesitation on the crosses, you'd think this one might see some yen strength if the dollar does find a little bit of a bounce here. So 219 low day close was 106.09. The 1618 is 106.25. Slope resistance over the next couple of days is right there. If it fails here, I don't really want to play the downside. I'm not really interested on this one. This is already kind of been a stretch trade. You made a full round circle to test the the high, low, high for the monthly opening range. I'd be more willing to look for a move here for something off this. So if you're holding longs, yeah, we're heading into the monthly highs, maybe somewhere to take a little off, at least bring your stop up if you're not going to take anything off. But, the bigger kahuna is going to be the 106 level just above. So it's the abomination, I must note. We've been too comfortable, in my opinion, on this trade, just because the technical clarity was ridiculous for so many weeks, right? This thing was just, you don't see dollar yen give you this kind of play very often. So nice call on the turn. Here's the move higher. Again, we're at the monthly range high, so something here, do something, pay attention. Strike higher. I want to see 106.09, 106.25. Looking for a bigger reaction there. If reached, bullish invalid now raised from 104.18 to 104.55. All right, that's last on my list. I see your questions there, Martin. I got you, buddy. One thing I just want to bring to your attention, because it's probably going to bring a lot of noise over the next couple days. Well, first of all, two things I want to bring to your attention. Bitcoin, yeah, 49,821. Remember we talked about that, 49,646. We're there now. You're seeing hesitation, you're seeing divergence, whatever you want to call it. I'm not calling a high, but I'm saying a level to watch for something. If it pops through 50, and 50 is a nice round number, psychological barrier, right? Look for the accelerated pop. Beyond that, you're looking at 55,000 and above. So the lunacy continues, but do be mindful of the fact that this thing is certainly super stretched here. Be careful. Okay, crude. So the crude levels I just wanted to highlight are right here into, wrong chart, into resistance. The intraday chart's a mess, but here's the daily. And you know what? Here's the weekly. 60.06, 60.66. Breakout region we talked about since the beginning of the year when we finally popped through that 75% parallel. It was kind of hairy there for a couple of weeks, didn't do jack, finally broke higher. Upper parallel, we were looking for 58 and change. Here's the last level, 60.06 into 60.66, looking for a reaction here this week. I'll also be mindful of the note that this just higher, where these dots are right here, is actually the objective 2020 yearly open, right? We're already testing the 2018 yearly open, the 618 extension. It's just loaded up here. Big zone. Also, last year's high week close is right here as well. It's a big deal. Yet another trade right into resistance. So be mindful of that. The intraday chart, like I said, I don't really have much of a structure here. So we'll reassess it as it comes, but as it stands already, that risk for topside exhaustion remains well below 60.66. So Marchin, sterling yen weekly looks overstretched and it's near 147.70s. Weekly sterling yen. Will it cooperate with S&P dipping? Pound yen. Yeah, so this is all I'm going to say to that, Marchin. I am mindful. I always tell you when I think things are overstretched, but I'm mindful of taking a stance based on that because again, the markets can stay overstretched, brother, way longer than we can stay liquid. So, and I always tell you this, things can stay overbought for weeks, months, years, and nothing says that has to come back. Sterling's been on a tear, yen's been on a sell-off. The combo here, I do agree, it does look stretched. Let me just put that out there, Marcin. If we're just talking about it between me and you, got a guy, yeah, it looks stretched, but what does that mean? It looked stretched to me at 144.30. It looks stretched at 145. It looks stretched at 146. I wouldn't touch this thing. let me go back to the daily. Well, here we're looking at something, okay? Here's something at least of interest. Basic slope resistance, uptrend off the lows that we made back in May 2020 and the September lows. Just parallels, resistance, resistance. At least we're seeing something there from a structural standpoint, right? So this is the 2016 high day close. Watch today's close with respect to 4670s, this upslope, this zone. You're not going to get much help on daily momentum because that's so overbought. By the time that gets into oversold territory, you're going to be off a couple hundred pips already. I already had a level here. I'm not sure where that's derived from. Okay, so that's just derived from the lows of October 18th. That's not a major. Okay. So with sterling trading where it is, Marchin, versus the dollar, right? Yeah, this could be a good exhaustion trade soon. Dollar yen's coming up near resistance, right? If I, again, just not a trade recommendation per se, just my humble opinion, I'd be looking for exhaustion just a bit higher. Let me see where this 786 is from. Bear with me one sec. Okay, that's no. Hmm. Okay, so these levels are a little stale, Marchin, on the intraday chart. So take them for what they're worth. I'm more interested to see if this slope holds. Look, at the end of the day, like I said, a bit higher puts you in a little bit better of a position, I think, for failure. Also, in account of where yen is, sterling's at resist. You could see a little bit more of a pop higher, but yeah, I think the exhaustion trade, you're on the right track. I mean, the thought process where you are, I think, is right on. Um, but we just don't have the technical conviction there yet. It's good timing. It's good placement as far as when and where it should fail, or you would want to see it fail. I shouldn't say should, but there's just nothing here for me yet to try to fight a trade like this. We'll keep it on the radar. Remind me of this on Thursday. You again sparked my interest as you always do, Marcin. So interesting set there. Euro Kiwi and Euro Oz. Euro Kiwi looks like this. I like this higher, or let me take that back. I like this finding support at these levels. So I was hoping for 67.60s. We're obviously dipped below that. We're now back above that, so it could be just a pivot. But you know, this one's been marking divergence into the lows. We're looking for you know, we are looking for a move lower in euro, but we're looking for a move lower in Kiwi too. And I think there's bigger spill there if Kiwi holds resistance. Let's see the intraday chart. Yeah, conviction isn't there yet. You know, maybe wishful thinking, but kind of what I would want to see start to guide a turn. All things held constant, you know, you're coming off of downtrend support. So how do you want to treat that? Do you want to treat that as just a bear market recovery? Or if you're of the mindset that there's a bigger turn underway here, that's a whole different ballgame. I just don't see any justification for it, or at least starting to look for that kind of move. Yeah, you're heading towards the lows. Actually, you did test the 2020 lows, and that held, but I don't have any like major technical support here. Maybe a little bit lower as the low day closed, which counted a little bit more from that 2019 drop, but not there quite yet. And what was the other one? Euro Oz. Let's see if there's a little bit more clarity there. Ugh. So outside day reversal today does put the onset of exhaustion on, but it's the same exact trade. Same exact trade. And both of them, I mean, again, for both of these, Marcin, Aussie and Kiwi are both doing their thing with resistance versus the dollar. So if that's any tell whatsoever, it's what would put my pause on trying to take a Aussie long position or Euro short, Euro Aussie short on this. So for me, if we pivot back and today ends up being an outside day reversal that takes you back above 56.22, might be a decent recovery. You're still in the bear market territory until you get 57.50s. Make sense? But be careful as always, Martin. Always want to be careful trying to call the lows, man. I'm with you. I'm just as excited as you guys can probably tell on all these dollar crosses, which could be marking some nice reversals near term. We just want to tread lightly, and we don't want to stack up. So from a you know, risk parameters, just your uh, capital preservation, your risk management. You don't want to start getting into too many counter trend, opposal, reversal type trends all at once, because if one of these don't turn out right, you could take a big, pretty heavy position there. So keep that in mind. And we will go ahead and wrap things up here if there are no other questions. Packed house today. Good to see you guys as always. Agnes, Marcin, Pete, Steve. Have a great week. Open to the week as we open up this shortened holiday week. I will see you guys right here on Thursday. Don't forget, tomorrow you do get those retail sales out of the United States. 1.1, 1.2 is what we're looking at. Let's see how far are we off the deviation there and if that moves things. Till then, best of luck trading, guys. Cheers.